Okay, so looking across today's earnings batch, there is a very strange common thread. We covered the reports from Alphabet, Meta, and Amazon, and they all posted what looked like just massive blowout profits on the surface.
Right, but the key phrase there is on the surface.
Exactly, because if you dig into it, this earnings window really revealed that big tech is using like massive accounting illusions to hide a terrifying AI infrastructure bill.
It is a total contortion of the balance sheet. They are pausing buybacks, they're taking on debt, really just doing anything to mask how much cash this build-out actually consumes.
I mean, Alphabet just claimed a $36 billion unrealized equity gain to boost their numbers. Meta used a retroactive tax windfall.
Which is pure paper padding. Let's be real.
No, exactly. Without those artifacts, their actual margins are getting absolutely crushed by server costs.
Yeah, and you really see the sheer scale of that spending with Amazon. I think their top line cloud growth was fine, but they had to borrow $53 billion in new debt just to keep buying chips and land.
Because their free cash flow was, it essentially evaporated under the weight of those capital expenditures.
Right. The old narrative of cloud companies just printing free cash is temporarily dead. This is heavy industry now. They're funding massive physical footprints.
And that physical footprint is actually where it gets really weird. It is causing a literal bottleneck down the supply chain.
You are talking about Teradyne.
Yeah, Teradyne tests the AI silicon, and they have incredible demand, but their stock crashed 20%.
Because you cannot install a massive piece of testing equipment if the hyperscale customer does not have a finished building to put it in.
Right. The data centers are literally not ready, so the hardware is just sitting around inflating Teradyne's accounts receivable.
So the delay is not the chips anymore, it is the general contractors and the HVAC installers.
Which is wild. So the big takeaway today is that the abstract AI boom is turning out to be incredibly expensive and incredibly physical.
Exactly. Software has a physical cost again, and investors are finally seeing the bill.
Fair point. Our daily feed has the full company episodes. If you want the call-by-call version of these, we will see you all tomorrow.